Hello, class. This chapter is about the different types of costs that we have in managerial accounting. All of the same costs still exist, but we're going to break them out differently than we did in financial accounting. The first cost that we're going to look at is fixed costs and variable costs. And what becomes important about costs in managerial accounting is how they behave. So a fixed cost is a cost that is going to stay the same no matter what your level of production is. So if we increase production, the fixed cost stays the same. If we decrease production, the fixed cost stays the same. So an example of a fixed cost would be rent. You're going to pay the same amount for the factory rent whether you're producing 10,000 units or one. It doesn't matter. The rent's the same. That's a fixed cost. It doesn't change as activity increases or decreases. A variable cost is a cost that does change when activity increases or decreases. In fact, a variable cost changes in proportion to the change in activity level. So let's say that we produce one more of whatever product we're producing. All of those variable costs that are associated with that product, we're going to have to add one more. So every unit that we produce, the variable cost goes up by 1 unit. An example of a variable cost would be if you're manufacturing a bicycle would be the pedals and the seat. Every single unit we make, we have the cost of additional pedals, additional seats. That's a variable cost. It's going to go up as I increase production in total. It's going to go down in total as I decrease production. Now let's look at the other side of this behavior. So going back to a fixed cost doesn't change no matter what our activity level is. However, we look at fixed costs as being, they don't change when activity changes, but our per unit cost does change. Because if I have $10,000 that I'm spending for rent, and I produce 1 unit, my rent is basically $10,000 for 1 unit. But if I produce 10,000 units, then my rent is basically $1 per unit. So fixed costs on a per unit basis do change based on how much we produce. Variable costs on a per unit basis stay the same because I have the seat, I have the pedals. Per unit, I can tell you exactly how much an additional seat and additional pedals is going to cost me. So per unit, if I produce 1 more unit, that per unit cost is just going to be, okay, there's our variable cost. So per unit, our variable cost stays the same. So that's how fixed costs and variable costs behave. The next big category is direct cost versus indirect costs. So in manufacturing, direct costs are a cost that we can trace specifically to manufacturing that product. So the wheels, the handlebars, the pedals, the seat, those are all direct costs of manufacturing a bicycle. Indirect costs are costs that cannot be traced directly to producing that object. Some of those costs that cannot be directly traced to producing that object are more obvious than other costs. For instance, if I have a supervisor that oversees the entire warehouse, that supervisor's salary is going to be an indirect cost because I can't say which line of bicycles I'm paying him for at any given point in the day. Maintenance on the factory equipment is going to be an indirect cost. Insurance, depreciation on the factory are indirect costs. Rent is an indirect cost. An indirect cost can also be completely related to making that product, but not worth tracing the cost directly to that product. For instance, if I'm manufacturing a bicycle, I have to grease the chain. I have to grease the ball bearing. So grease, I mean, I definitely have to have grease in order to manufacture the product. It goes right in that bicycle. But it's an indirect cost because it wouldn't make any sense to figure out exactly how much the cost of the grease is for each chain that I'm greasing. So that makes it an indirect cost. So also notice fixed cost, variable cost, direct costs, indirect costs. So they're not mutually exclusive categories. What I mean is a fixed cost can be direct or indirect. They're usually indirect, but a fixed cost can be direct or indirect. A variable cost can be direct or indirect. So just because it's fixed doesn't answer the question about whether it's direct or indirect. So we are going to, product and period. Okay, so the last one is, we are specifically manufacturing a product. In the product costs, what it costs to manufacture the product is direct labor, direct materials, and manufacturing overhead. Direct labor, direct materials, and manufacturing overhead. Those are the product costs. Those are the costs that go directly into manufacturing the product. Examples of manufacturing overhead is the factory rent, the factory maintenance, the depreciation on factory equipment, the salary for the factory supervisor. Those are all manufacturing overhead. They're directly related to manufacturing. Those are product costs. The other category of costs are period costs. Period costs are called period costs because they are expensed in the period in which they are incurred. That means that if I incur the expense in January, it's going to be on the income statement in January. That's different than product costs because product costs are part of inventory. Product costs go on the balance sheet because we want to match that cost with the revenue when we sell it. So product costs are part of inventory and go on the balance sheet. Period costs get expensed when they are incurred. An example of a period cost is the rent on the business office, the salaries for the human resource department, the salaries for the accounting department, the CEO's salary, the depreciation on the equipment in the business office, marketing costs, shipping costs to the customers are actually period costs because the product's already been manufactured. So we have product costs and period costs. So in summary, we've learned fixed cost and variable cost, direct cost and indirect cost, product cost and period cost. So we're going to go work with those. I'm going to pull up our homework, our practice problems. And this is the first one. So you're asked to identify, is the cost variable or fixed, and is it direct or indirect? So leather covers for soccer balls. So you want to ask yourself, variable or fixed? Is the amount going to go up the more soccer balls I produce? Yes, it is, because every soccer ball I produce is going to need another leather cover. That makes it variable. So that we can think variable or fixed, direct or indirect, we're going to go all the way down the variable or fixed column and then go back and go all the way down the direct or indirect column. The annual flat fee paid for office security. So it's a flat fee, so it's not going to change based on production. That makes it fixed. The coolants for the machinery. The coolants for the machinery. The more the machinery is used, the more coolant that is required. So that's going to be variable. Wages for assembly workers. The more they work, the more the expenses. The less production we have, we're going to lay off people. So wages is a variable expense. The lace to hold the balls together. Every ball that we use, we have to use lace. So every item that we make is going to add to that expense. So this is a variable cost. The taxes on the factory. The taxes on the factory have nothing to do with increasing production. So the taxes on the factory are going to be fixed. Machinery depreciation. Machinery depreciation. So It's straight line. The amount isn't going to change. So the machinery depreciation is going to be fixed. And I'm actually not sure about the coolants for machinery, so I'm going to do check my work, because I could go either way with that. That's what I was thinking. So I'm going to return to question. And I'm going to say, okay, so coolants for machinery is fixed because I'm going to use the same amount of coolant, really. It's not going to vary that much based on production. Now let's look at direct or indirect. Leather covers for soccer balls. Okay, so that's directly related to manufacturing a soccer ball. Sometimes direct costs are called touch costs because you typically have to touch the product for it to be a direct cost. The annual flat fee paid for office security. That's indirect. It's not directly related to the soccer ball. I can make the soccer ball without the security. Coolants for the machinery. That's also indirect because it's not directly related to the actual soccer ball. I need it to operate the equipment, but all the equipment in general, not just to make the soccer balls. The wages of the assembly workers. Okay, these are assembly workers. So when you look at workers, they're assembly workers, they're touching whatever we're manufacturing. So the assembly workers is going to be a direct cost. The supervisors would end up being an indirect cost. The lace to hold together. So the lace to hold together would be, I would think, a direct cost. It has to be important enough to be able to have to quantify it. So I'm thinking it's a direct cost. We're going to check that. It absolutely is a variable cost. The taxes on the factory, those are indirect because they're not directly related to manufacturing that soccer ball. And the depreciation on the machinery is also indirect. So let's check the lace. So I'm going to say check my work. And that's what I thought. So here they're saying, okay, the lace isn't a significant enough cost. It's kind of like the grease that I was talking about. The lace isn't a significant enough cost. So we're going to say it's indirect. And if you're wondering, how am I going to know? Well, part of it's practice, and part of it is the questions on the test are much clearer. Okay, that's the first problem. The next one is not fixed or variable or direct or indirect. So this wraps up our discussion of fixed and variable, direct or indirect, and product versus period costs.